Hey, what's going on? Today is the 18th of January 24. It is a Thursday, and we are getting a pretty good rally in the market. If we look at the chart real quick, still chopping around this 2.88% range, and yeah, we're up about 0.7 on the day currently. It is about almost 2:45 p.m. No new 112 or 1122 trades today, but I do want to start putting on a hedge. I've been looking into hedges a lot, and yeah, I want to add that to my portfolio. So come back here, and I'm going to come here to the MES. Going to go to trade and 120 days. And all it is to get it started, it's just a long put ratio spread. So you can pick this from Tasty Trade's menus. Long put ratio spread, hit go, but then I come much farther out of the money. And so I looked at the 10 delta for the one short, and then the 5 delta, which there's two of them here. Doesn't really matter. Obviously it'd be a little cheaper if you go there, but then it defaults to one short and two long down here. So I just want to bump the longs to 3. So that will end up as a debit overall, $22 debit. So times that by 5 because it's the MES, and that's what, $110. So come here, come to the curve, go to analysis, I unchecked it, zoom out. So right here, you can see at the top here, it says -110 at expiration. So right now it's going to cost me $110 to buy this. But that's fine, because when the put side gets to 50% or more, depending on how long I want to wait, I'm going to close that and then sell another one, right? So then that'll eventually, once I do that cycle enough, it'll eventually make this hedge free. And how this works is, if the market starts to crash, right now this would cost $110. And if the market, drops, we're at like 40, well, this says 48.55 for this expiration, but let's say it drops to 4,500, which would be about 300 points, I guess 350 for this expiration. It says the P&L theoretical is -160. But that's if that happened today, which obviously that's not, because the market's up, and that would be an insane reversal. Anyways, so that's today. But if you come over here and say, let's move it to a week from now, which even that would be quite the sell-off. And then more importantly down here, the IV, if you bump this, let's say the IV increases just 5%, which I think it'd probably go a lot higher than that. Right now, the P&L for the theoretical is only 70, right? Down here at 4,500. But it would probably go up more, like at least 10%. I don't know exactly how it's calculating this. But anyways, at that point, down to 4,500, and all of a sudden you're making money, right? Even though I still have this short put, I have 3 long puts. So as long as I have more long puts than short puts, this hedge will make money on the way down, or at least lessen the losses. So, I mean, look at this. If it got all the way down to 4,200, I'd be up $500 with just this one position. So I'm not sure if that makes sense or not, but it makes sense to me. I'm just going to put the trade on here, but the one caveat here is that I'm going to leg into this. So today's a really big up day. So I'm going to buy the puts, and I'll put on the short put later. So today is up, you know, what I say, 0.7%. It's dropped down 0.6% positive. And IV, the VIX is down 3%. It's down to 14, where yesterday, you know, was up around 15-ish. I guess it closed at 14.7. It's 14.26. Anyways, VIX is down, market's up. So I'm going to leg in and only buy the long puts. So come here to the 120-day expiration, just like I did earlier. And then I'm going to come up to the 5 delta, and I'm going to buy 3 of these. And then just to double check this, if I come to the 10 and short that, I just need 1 though. All right, there we go. 3 long, 1 short. And if we come to the curve, it's going to cost about $100. Just 91 right now. And I imagine that's because the IV is going down, right? So come back here. I'm going to delete this leg. And we're at 3,900, the 5 delta. And I'm going to come here, review and send. This is in the futures account. So you can see right here, since I'm buying long puts, it actually increases my, due to the other positions that are in my account right now. So let's see, review and send. Boom, there we go, it just got filled. All right, so now there's 3 long puts. Come here to the curve, go to analysis, let's check everything. So right now, this is what it looks like with everything. So this is with everything as is at expiration, is I'd lose $111. But that's if I let it just go unmanaged, right? So that's not gonna happen. But if you look at the orange line here, you can already see if the market drops to 4,500, I'd make $138 instead of losing money. So that's with the hedge just as is right now. And then on a down day, I am going to sell the 1 put at whatever the 10 delta is, and then it'll be a complete hedge at that point. And then I'll let this 1 short put decay, and when it gets to 50% or whatever, I'll close that and then bump it to the next 10 delta and sell another one. All right, that's enough rambling about how to do the trade. Let's enter this into the spreadsheet. All right, so I'm here on the futures and MES. And I guess for now, I'll just call this the hedge. And let's see if we go activity, now go here. Got 3 of the 3,900 puts. 3,900 long puts. Expiration is 17th of May, 2024. DTE was, let's see, 120 days. Opened it today, which is the 18th of January. Multiplier 5, contracts 3, and it cost me $228.75. Well, no, I guess since I put the multiplier, I want to know this value. It cost me $15.25. Oops, not a credit though. Got a debit, and then, which is the real dollar amount, $228.75. Let's see if that matches up. I think it does. Yep, $228.75 here, $228.75. And then the fees to open was, we'll just do equals 4.5 plus 1.56, $6.06 to open. Cost me $228, but that's before I sell a short put to help finance this, right? And then, oh yeah, guess I'll put in this stuff too. I'm not using this column. It was at the 5 delta. The percent pop doesn't even matter. It's like 5, right? 5 delta, 5%. IV rank, 18.4. And then the market was at, well, according to this contract, 48.56.5. And I think the last thing here is to go to the positions, and I'm going to name this group positions. Just going to call it hedge. Guess I'll do hedge 1. And I guess to match up the sheet here, I'll come back and call this hedge 1. All right, I think that's it. On the next down day, I will sell more puts, or sell a put against, whoops, this hedge here. And then it'll finally be working, and that put will decay. I'll close that, sell another put, do the cycle over and over, and then eventually this becomes a free hedge. In theory. So we will see how that works out. All right, I gotta go. Thanks for tuning in. All right, just kidding, I'm back. After thinking about this, since this is my very first hedge, I do want to sell that put at the same time. So that's what I'm gonna do real quick here. At the 120, and come to the 10, and I'm gonna sell that. Try to get 27, but probably not. All right, for the sake of time, I just got that filled. I need to go pick up my kid from school here. So here we go. 1 short, 3 long. Come in here to the curve. Come to active. Nope. Come to curve. Why is the analysis not showing? Analysis. Clear these. So do 3 and the 1. And there we go. So this costs me $96.25 right now. And when this hedge here, or this short put, becomes, 50%, I'll probably close it. And then, assuming the market doesn't crash, once this loses, some of its value, half of its value, 75%, I don't know. I'll close it out. I mean, look, this has already dropped to the 9 delta instead of the 10. So yeah, I'll close that out. And when I do, this will be at like a 5 delta. So then I come back up here, sell another one at the 10, which would be the same price, rinse and repeat. And these 3 eventually become free. I guess I can enter this into the spreadsheet real quick. So we will come down to activity, and we'll do MES, hedge 1, and that is at the 4,200. That's a short put. 17 May 24, 120. Opened it today. Multipliers 5. Oops. This one only has 1 contract. And I got a credit of $26.50, which makes a real credit. Got $132.50 to sell that. All right, then let's add in the fees here. Just select this one. So the fees were $1.202, right? All right, here we go. After fees, it cost me $104.33. All right, I got to get going. I've got this on here. This 4,200 short put is going to decay, and then I'll close it out. sell a new one, let that decay, close that out, and then eventually these 3 long puts become free. And meanwhile, if the market crashes while I'm doing that, I have 3 of the long puts, right, over here. I have 3 longs, 1 short, and as long as I have more longs than shorts, I have a hedge. So in theory, that's how it works. All right, I really got to go. See ya.